Mortgage interest rates shot up in recent months. And buyers are well aware that inventory remains low while home prices continue to rise. In this environment, some prospective home buyers will inevitably decide to wait things out and buy a house in 2023 instead. Today we will tell you about the real estate market in 2023 and beyond. Eight. A rise in mortgage interest rates could tip the housing market in 2023. Experts say that the average 30-year mortgage rate to climb marginally to 3.5% at the end of 2023. The average rate at pre-pandemic was 3.7%. Low borrowing costs offer buyers marginal relief as prices rise higher, which is good news for investors looking to flip. While prices aren't forecasted to decline, Fannie Mae predicts price growth during 2023 will be slower than average. If we compare the 2023 market to the end of 2021 and the coming year, 2022, a cooling trend would be a positive development after such an overheated past year. A slowdown in home price appreciation and maybe more inventory could help avoid a 2023 real estate market crash. Home prices have risen so exponentially that many potential buyers, especially millennials, have been priced out of the market. This has been great for house flippers, but it could change for the 2023 housing market. 7. Inflation. If inflation rises, there will be less consumer spending, leading to an economic downturn, economic instability, and a possible recession. This will certainly boost the chances of a 2023 crash. 6. Unsustainable market prices bubble pops. Sticker shock will eventually take hold and dampen buyer demand by presenting affordability challenges. 5. Rise in mortgage interest rates. With each percentage point hike, the potential pool of buyers will shrink with each point hike, creating a snowball effect on dropping prices as sellers on the sidelines scramble to jump in to catch the falling prices. 4. Pandemic. The lowered economic activity that can come with a pandemic may surge in 2023. People are nervous about moving homes, so they stay home and avoid spending money. 3. Campaigning for 2024 election. The pre-election year can be fraught with uncertainty for many, and uncertainty is never good for the economy, especially the 2023 housing market. 2. Inflation might be a factor in the 2023 housing market crash. Inflation is the 800-pound gorilla in any economic recipe and therefore is the most significant risk to the 2023 housing market. Doug Duncan, Fannie Mae Senior VP and Chief Economist, stated in December 2021, "While the economy picked up steam late in the year, unfortunately, so did inflation, and the market expects the Fed to recalibrate its monetary policy as a result." The public registered its ill will toward inflation in most recent national housing survey, which found that 70% of consumers believe the economy to be on the wrong track, the most since 2011. When the aftermath of the Great Recession weighed down consumer sentiment, the Fed recently acknowledged that inflation is unlikely to be transitory. It will now attempt to engineer a soft landing, one in which inflation moderates to acceptable levels and economic growth decelerates but doesn't contract. Whether the Fed can thread this historically difficult policy needle is shaping up to be one of the most consequential economic storylines of 2022. To combat inflation, the Fed will switch to its other favorite tool in its toolbox. What's in the Fed's toolbox exactly? There are only two tools in there, a money printer and an interest rate adjuster. The Fed has been lowering interest rates and printing money since the 2008 financial crisis to move the economy out of the red and back into the black. Between 2008 and 2014, the Federal Reserve printed more than $3.5 trillion out of thin air. That is more than they had printed in the 100 years before the Great Recession combined. 1. Your next steps, whether you decide to strike now or take a housing hiatus until next year, don't lose sight of the fact that you are in charge. Taking even small steps now to improve your finances and set a budget could make all the difference in your home buying plans. There is no shame in waiting things out, but be proactive by doing what's necessary now to fast-track your home purchase in 2023. Do let us know in the comments what you think of this matter. Thanks for watching.